Is now the time to buy stocks whole hog? Is now the time to sell stocks before the great collapse? Or should we wait and see what happens after major companies present their earnings this quarter? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, I'm going to give you the reasons why the stocks should be sold, why stocks should be bought, and why maybe we should wait until we have the major earnings out on companies before we buy. I'm going to give you the reasons for each course, because each are equally viable right now, and I'll give you an idea of what my plan or strategy is going to be in these difficult times. This will be a good one because I'm also going to go over the major earnings that are coming out, and then I'm going to present you with some stocks that are good buys in this condition. The first reason not to buy is the probability or high likelihood that we're going to have a recession. And the 3-month bond and the 10-year yield on bonds recently inverted. For a brief period of time, the 3-month actually had a higher interest rate than the 10-year bond, which makes no sense at all, but is an anticipation of interest rates keep rising. So right now, the 10-year bond is about at 4.21%, and the 3-month bond is 3.91%. So they uninverted, but that's always a bad sign, because 100% of the time when the 3-month bond and the 10-year bond have inverted, there's been a recession shortly thereafter. Snapchat, otherwise known as Snap, S-N-A-P is its sign, reported the third quarterly earnings, and they reported the slowest quarterly growth ever, although they did manage to add some new users. But it still was a pretty negative report, and the stock went down 27% in the after hours. You are also getting some hyped up bear market rallies. And the recent rally, which was impressive, and it kind of shakes the faith of the bears and makes you want to become bullish, which I may do to some degree, because the sentiment is so negative and there's so much negative news that you get any positive news, it'll lift the market up. But the reason that we had a rally recently is that the Bank of Japan intervened on their currency. They bought a bunch of their own yen, which increased the value of the yen, and then it decreases the value of the dollar. When the dollar goes down, stocks go up in this market. So that was, we can thank the Bank of Japan for lifting our stock market. But other countries will do this to save their currency. They buy the bonds. They intervene on the FX market, the Forex market, where currencies are exchanged. They intervene there, and that lifts their currency. And when their currency gets lifted, our currency gets devalued somewhat. Inflation is literally causing chaos throughout the world, and we think we have it bad here. Believe me, it's far worse in other countries. England is an example. Their inflation rate is well over 10%, and Liz Truss, who was prime minister for only 45 days, did an incredibly stupid thing. Inflation is running high in Great Britain, and she cut taxes, especially on the wealthy. And cutting taxes is giving people more money to spend, which will make inflation worse. There was such an outcry that she resigned from office after 45 days. And I guess she'll collect a pension for a lifetime after just those 45 days. That's their law. And England has their pension system is much more significant. The United States kind of has done away with pensions, and we have 401ks instead. But because she did that, she cut the taxes, that this made their pension system unstable because they have a lot of investment in bonds. And basically, their pension system was going to go down if the interest rates kept getting worse and worse, which was going to happen if they keep making inflation worse by doing things like a tax cut. So it was not a bold move. It was a stupid move. Okay. Also, the 2-year bond and the 10-year bond, they're like permanently inverted. The 2-year bond is paying like 4.6%, and the 3-year bond is paying about 3.91%. But that's not it's not a 100% predictor, but it's a high predictor, like 70 to 80% of the time. And that's been inverted for a long time. So there's a strong probability that we're in a technical recession right now, and it's liable to get worse. Another sign of recession coming is Whirlpool, which makes home appliances, is cutting down on production. And you would think with the rising interest rates and rising mortgage rates, there's going to be less houses sold and less appliances sold in the future. So it's a pretty good sign of a recession coming. So stocks like Home Depot and Lowe's are likely to go down also. It's likely to be a massive effect. I think the real estate market will go down, the real estate index, but I expect it to be somewhat less significant than in 2008, simply because the people's credit, people that own houses now, their credit is better than it was in 2008. The other factor that isn't really being reported on very much, you see a story once in a while here and there, but there seems to be a worldwide drought. And I think this is because of climate change, the warmer temperatures. But there's a funny thing that goes with this. Because the air is generally somewhat warmer, it carries more moisture. So if you live near the ocean, when it does rain, it floods. The East Coast is in no drought because they've been getting hurricanes and rainstorms and tropical rainstorms that has more than replenished any water that they need. In China, the Yangtze River is drying up. To the point that they're having trouble shipping things down it. The Mississippi is starting to dry up. It has much lower levels, and shipping is starting to be a problem with even the mighty Mississippi. And also in Europe, the Rhine River has gone down massively. And someone in the Middle Ages carved in stone, if you can see this, you're in for a terrible time. Those aren't the words, but something to that effect. And the reason is because if you could see what they carved into this rock, it will be because there's been a great drought, and you're experiencing the once in 500-year drought again. Another reason is that the corporations are beginning to lay people off, and 50% of CEOs say they are considering doing more layoffs in the coming 6 months. What are the reasons for the market going up? Very few, actually. There's this idea of seasonality, and people think, and statistics show that during midterms, stock markets tend to go up. So that's a possible factor. But I think the main factor is the bear market rally that occurred. Is this a bear market rally, or have things gotten has the sentiment gotten so negative that we don't need much to propel it forward? I think people are really sick of this bear market. They want it to go forward so badly, and that they will take most any sign now, after having lost probably a significant amount in the stock market, that they're willing to bet that it's time for it to turn around based on their previous experiences with the market. Next week, I'm going to be looking at the earnings of 5 mega companies. These are the FANGs. These are the multi-trillion dollar or close to $1 trillion companies. On Tuesday, the 25th of October, we have Alphabet, which is Google, and Microsoft report. Now, I expect this not to be that encouraging. Microsoft is expected to have the slowest revenue growth in about 5 years. So that's not going to be too much of an upper for the market. And Google, I will say that one will expect to be somewhat down, but not massively. It all depends on their revenue growth as far as ad growth goes, especially on YouTube. YouTube is such a central part of Google and is so important. So I think Google will come in with probably a pretty good report. Microsoft will probably come in with a less than impressive report. I expect the result to be indecisive. Of the two, I like Google better. I think it's more undervalued, and I think it's just a solid stock that's going to perform well in the future when we get out of this slump we're in. On Wednesday, the 26th of October, Meta, formerly known as Facebook in a previous life, they report. And basically, the thing with Meta, their Facebook, Instagram are leaders in revenue from ads on the internet. But they've taken this diversion to the metaverse. And it all depends on if you believe the metaverse is going to be as big of a deal as Mark Zuckerberg thinks it's going to be. That one is, you're betting on the future. It's undervalued, okay? But the question is there a good reason for the undervalued? And I think the reason is whether you believe in the metaverse or not. If you believe in it, it's undervalued. If you don't believe in it, it's overvalued. Well, not overvalued, but it doesn't deserve a premium. Let's put it that way. But Thursday is the giant of a day. This is the day that will tell the tale. Amazon and Apple report. Okay, Apple will do okay. I don't think they're going to do spectacular, but they'll do at least a B plus report probably, because they're such a solid company and they're such a big part of the market, and they've been what's been holding the market up and keeping it from doing a major crash. Amazon, on the other hand, I think that company is the best barometer of how the overall economy is doing, because you can buy almost anything on Amazon, right? So if people are buying at Amazon, probably the economy is in pretty good shape. But I'm going to wait till all 5 companies come in. I don't want to come in and then be sucker punched, which I think is so easily done in these days. The sentiment is so negative is that if they come out with sort of positive results, that'll be massively bullish for the market, and the market will go crazy. But I think we're probably going to get moderate results. I don't expect them to be super positive, but on the other hand, I don't expect them to be super negative. On a scale of 10, with 10 being the most positive, it's probably like a 6, no more than a 7, probably no worse than a 4, certainly no worse than a 3. If it comes out much worse than I think they will, we're in for a collapse, folks. Because I think these are the companies that have been holding the market up. These are the companies I watch. These are the technology leaders, which is, in my mind, the place to be in the stock market when it's growing. A stock I'll be buying if the earnings come in good for the third quarter on these major companies, which I think will give some uplift to the stock market. I like Sigma Lithium. SGML is its sign. It has a growth rate, earnings growth rate of 40%, and its price to earnings is a reasonable 10. It doesn't get much better than this, folks. Aher Test Systems is somewhat pricey, as its price to earnings is 26, which has made me a little hesitant, but it has a wonderful earnings growth rate of 42%. Another stock I'll be buying if the earnings come in positive is Super Microcomputer, SMCI. It has an earnings growth rate of an excellent 39%, and its price to earnings is only 11. So this is a keeper. They make all manner of computer equipment, and servers are the main things they make. So I think in the right environment, they could take off even more. And they went up 5% when the market recently rallied at the end of the week. So that's the way I roll. So the end of the story is that I'm waiting to see how the earnings come in, and I probably will not go into the market until the week after next week. Next week is a wait and see moment for me. I got to see what all these big mega companies do on their earnings growth, and especially what Amazon does, even more so than what Apple does. Apple will do okay, I think. Amazon will be the key to how the economy is performing, in my mind. So that's the way I roll. Thanks for listening and watching. Be sure to hit the like button and subscribe if you haven't done that already, and I'll plan to see you in the next one. Thank you.